Hey, what's going on, guys? Corey Smith here, back again, Core FX. Bringing you another pre-week market analysis here. Today is actually Saturday, October 7th, but I do these for Sunday, pre-week, when markets open in New Zealand, 5 p.m. Eastern Time. Um, so this will be for the week of October 8th, and I'll be covering what happened last week in the markets, what major events went on, some technical levels that were violated or approached, as well as top performing, underperforming currencies. And basically, go ahead and do that in prediction of what's going to happen next week, what events to watch and look out for, trade around or not trade around, um, what currencies I'm expecting to perform and underperform, which technical setups I like, don't like, and so on. This week, not too much to cover as far as news last week, and not too much to cover as far as news next week, so it'll be a little lighter on the fundamental side, and I'll dive a little more in depth in technical analysis this week. So for all you out there that like the charting side of these videos, this week will be a great one for you. Um, Again, I thank you. I appreciate you guys coming and tuning in and taking the time to watch these. Really, really much appreciated. And subscribe and like if you like what you're seeing here. I'm going to go ahead and jump right in. So, starting with last week's currency performance, as you can see here, all the way left is going to be the strongest, all the way right is going to be the weakest. This is on a weekly performance basis. You can see here with this tool on FinViz, you can change it for a daily, weekly, monthly. I analyze week to week with you guys here, so this is going to be the weekly. All the way on the right, you can see the biggest mover of the week was the pound. It dropped by 2.5%. That's a pretty good move for over a week's time period. That's a strong, strong move. Haven't seen moves like that in a little while here, so it's great to see this volatility returning fully. As you can see, right behind the pound being the weakest performer, you have New Zealand. New Zealand was dropped by 1.5 points. Was the second worst performer of the week, and the Swiss franc was the third worst performer of the week, dropping by a full percentage point. You can see the Aussie, Euro, CAD, and Yen were all weaker on the week as well, but that's because we compare this to the US dollar. That's how this is determined. The dollar was the strongest. Japanese yen and the CAD were the second two strongest. They were just not as strong a mover as the dollar, so they're going to be coming up as a negative percentage here because the dollar moved in more against them. So switching over here to the futures charts to show us here the overall moves of each currency. Starting with the dollar, you can see this is where we started on the week. We ended on the week higher. We set a higher high, a higher low, a higher high, and have retraced now to set what could be a new higher low. Switching this over to the dollar chart, you can see here as we've analyzed, this did exactly as we predicted last week. We had come down in this beautiful downtrend, hit a bottom here, did a little inverse head and shoulders on the lower time frame 4-hour chart, and then price has now broke the neckline and has continued higher. This week we actually managed to break a very critical downtrend counter trend line now as it's growing in an uptrend. You can see prices now trading above the 50, above the 20 SMAs. They are now both starting to slope upward, and the 20 looks like it's going to try to cross the 50 here this week. Friday we closed with a shooting star candle in this really strong resistance zone, but all in all, we're still very bullish now with the dollar as it's reversing here. I expect a slight retracement, setting a higher low around here somewhere, maybe retest this trend line before continuing to set a higher high and pushing out above this resistance here. Moving on to the euro, as we see here, the euro opened here on Sunday, closed slightly lower here on Friday, ended lower on the week, but nothing too crazy. This also did exactly as we had predicted. If we take this over to the euro chart, as you guys can see, we had predicted when price came up here, formed this triple top, head and shoulders pattern. We then reversed, broke under this strong weekly resistance turn support, and have now been chopping around above this next area of support here at around the 113 level. As you can see this week, we did break lower, but then price pushed right back up higher, so we're still struggling to break this zone here. But if you look at the moving averages, you can see the 20 and the 50 have both now begun to roll over. 20 is about to cross under the 50, which is a bearish reversal signal. So we'll wait to see here how this goes this week, but this is a very critical level we have here. I expect it to break this sometime this week. Takes us over to the yen. And the Japanese yen was one of the stronger performers on the week. But as you can see, it opened here and only closed up here, so choppy week for it, but all in all ended just slightly higher where we opened. If you look here on the charts, we talked about how reversed into this downtrend. The 20 crossed the 50. Now we have the 20 crossing the 200 SMA. Both the 20 and the 50 are now pointing downward, and price is trading below the 200 now as well. As you can see, we were in this tight little consolidation on the support, and we broke below it this week, but then as we said, it reversed back up and slightly above where we opened on the week. But all in all, not too much going on. Still in this now low basing pattern below all the SMAs, so I'm expecting this to roll over as well here. The yen was weak and opened weaker here as the stocks, equities plowed into record highs all week long, as this is a risk-off. It's a safe haven currency. So when there's a risk-on environment and people are investing in riskier assets like the stock markets, money kind of tends to leave the yen, and we see a depreciation in the yen. And that's what this open down here was. But then there was scare in the markets that the North Korean regime could possibly be testing another ballistics missile this weekend, and whenever that happens, money floods to the yen as there's uncertainty of wars and political tension and all this stuff. So that's tension Friday is what led to this big bullish candle reversing out of this low that it began to set. So if next week we come in with nothing having been shot off this weekend and equities are still looking all right, then I think the yen will break this and move lower. Taking us to the British pound. Sterling, the cable, whatever you want to call it. We opened up here, and as you can see, strong sell-off all week long, just from top left to bottom right. We opened up 2.5% lower than we opened, and this was a big move lower in the terms of price movement for currencies. It was really from the numbers that we'll cover here in a minute on the news. This was a data-led decline. As we've been saying with the pound, with Brexit looming, it's taken a toll on the British pound, as you can see back here with the Brexit, this huge, massive sell-off. This was all from Brexit, so it has really been weighing on the British pound. However, we've been seeing great data out of their economy and great numbers, so you can see this uptrend has come back to regain some of these losses that it's been suffering from Brexit. And this week you can see this strong sell-offs because the data and the numbers took a hit again this week, mainly out of the PMI, PMI numbers that we'll cover in a little bit. Started the week, and then Tuesday we had on week as well, and this just led to a sell-off all week as worries still loom with Brexit, and this is starting to weigh in more and more the more they disappoint with their numbers. So as you can see, we made this high. We were in this high and tight base. We said it could have broke higher, but it broke lower, broke the weekly support line, broke both SMAs, broke 2 layers of support, and is now sitting on this support here. It's about to hit a strong weekly trend line as well as above this weekly support, so we could see a bounce after a strong move like that. Typically we do see a little bit of a rally, but we'll wait to see what this week brings us and what numbers we get out of the UK territory. Moving on to the Canadian dollar. The sell-off continues now for a month straight off the highs we hit in early September. This week you can see we opened here and closed down here, so not much of a decline, but we're still making lower lows and lower highs, and we're still on this downtrend. Switching it over to the chart here, you can see a little better. This was the high that we hit up here at 81.50, and since then price has just fallen off like a rock all the way down, breaking key SMAs and significant resistance on the weekly time frame, turned support, and has just fallen off continually for a month straight. So we'll see what goes on here. This was again data driven, and although we were very bullish with the CAD a month ago, with the interest rate hike and great numbers coming out of Canada, we have to be willing to adapt and change in these markets, and that is exactly what we've done because there's been weak data and prices rolled over. Now trading below both SMAs, which are rolling over, setting a new lower low. We are now switching to an uptrend, so I'm expecting a higher low to be set before another lower low. So, you got to be ready to shift and change your focus. You can't be anchored to any one belief, and we are now in a downtrend for the Canadian dollar. We thought this past week it could have possibly held on here and rallied higher, but we continue to see weak numbers, so this has actually fallen lower. Taking us over to the Swiss franc. Swiss franc, as you can see, opened up here, closed down here, so we have bearish week overall. And I know you guys have been hearing it from me now since I started doing these videos a few months ago. I have not been following very happy about the Swiss franc, as it's been in a horrible range-bound, choppy area, but we finally have this break of this support that I've been talking about. We finally have something worth watching. SMA's rolled over, 20 below the 50, broke the 200 SMA, but bounced right back, as this is also on a very strong weekly level. I expect a little bit of a rally. Potentially we can get a rally up here to retest this broken zone before it rolls over further. It's a potential move it can make, but all in all, Swiss franc's back on my radar, back to something I really want to watch, and hopefully this doesn't just bounce back up into this range and continue to be a sloppy trading pair. Hopefully we get a trend now to the downside and can try to look for some opportunities here. This takes us over to the Australian dollar chart. We opened here on Sunday, closed down here, slightly lower on the week, nothing too crazy, but when we take it to the chart here, another one where the rollover, the downtrend continues, is the third week straight of a downtrend out of the Aussie now. After it violated this uptrend here, this black line where it was trending upwards, setting higher highs, higher lows, higher highs. We double topped up here off this weekly resistance and has just fallen off since. We're back down now if you look back here to this very strong weekly support now level that we just hit, so I do certainly expect it to at least move sideways and struggle to break below this. Maybe we rally up, get some sellers to see a more attractive price and get back and enter the markets, but I'm very bearish on this overall. 20 cross below the 50. They're now sliding downwards, and we have made a significant lower low. Little lower high here, lower low. Expect another lower high before rallying again. I mean, falling lower again, but overall very bearish when it comes to the Aussie. That takes us over to the New Zealand dollar. New Zealand dollar is opened here on Wednesday, closed here. So you can see it's another very weak performer on the week. Just fell off top left, bottom right. When we take this over to the daily chart, another thing that I'm happy about here, we finally have a violation of this support we were talking about. We are stuck in this zone since we've been doing these videos in this range between the 72, 73 area, and we have now broken lower and actually passed straight through 71 without even looking back. Saw a little bit of a pullback here on Friday, but this is a very strong move. And considering this is a risk on currency, this is a more risky asset, higher yielding currency. So when the stock market's doing great, you usually see money flow into this and leave things like the Swiss franc and the yen. However, money hasn't been coming in New Zealand or Australia or CAD for that matter, and those are the three currencies that typically benefit when this is going on. So this is showing there's more to the story right now than just the risk on, risk off sentiment. That means the things going on in these countries individually are outweighing it all. So we're going to have to keep a real close eye on data out of each of these countries. It seems that as far as fundamentals go with foreign exchange right now, it's more highly data dependent than it's been in a long time. And every single news report coming out is very closely watched and really is the determining factor of where price action is taking us. So again, the fundamentals are what drives price and the technicals are what guides it. The technicals are the ones that give it a technical movement between pricing and patterns and everything, but the fundamentals are the underlying driving force to these prices, which is why we cover both here with CoreFX. But New Zealand, I can expect to pull back and retest this 71.50 around area before rolling over and continuing lower. But all in all, I am expecting a downtrend to continue out of New Zealand. And real quickly, I want to cover the U.S. stock markets. This is the S&P 500 index. As you can see, we are under this resistance, setting all-time highs with every push higher we're making now. We had a little rollback, and then this week, price just exploded higher into record territories. We've been in a bull market for 8-9 years now, and as with everything with the cycles in the economy, they do come to an end. Bull markets do not go on forever. History has told us this over and over again. And typically when these runs end, it is from a massive, impulsive, strong push higher, which I'm not saying that's what this is, but this parabolic move we're seeing could be the start to the highs being hit and the stock market rolling over. Now, economic data does not suggest this, so I'm not saying that's what this is in any kind of way, because our economy is strong and getting stronger. However, when something like this happens and you see this parabolic move higher, typically the markets start rallying more and more and more. This gets more and more people involved in the stock markets because they see how much higher it's going. So people that normally don't give two shits about the stocks are now getting involved because everybody's all they hear all day long and all they see all day long is stock markets record highs, stock markets record highs, stock markets record highs. The stockbrokers saying that they're making killings and everyone's missing out. So what do everyone do? They all run to the markets. They all buy whatever they can, whatever their broker tells them to. Everybody enters the markets. We get this huge push higher, and then there's nobody left to buy. There's no one left to come in and buy. I forget who it is. The investor, maybe Warren Buffett, one of them says when the guy's cleaning your shoes is giving you stock advice, that's when you know to start selling. Something along those lines. I just butchered that, but something along those lines. Basically, what I'm saying is when this parabolic move happens, this means everybody and their mother is getting involved in the stock market because it's doing so well, and we get this huge push higher, but then the market is supply and demand based, and now all of the demand dries up because everybody's in the markets. Now where can price go? Can't go higher. There's nobody left to buy. So what does it do? It tanks. Everybody starts losing money. Everybody wants to get out of losing positions, and then we have a squeeze. Everybody goes short. Everyone gets out, and price reverses hard. So just a little lesson here on how to spot tops in things like this. And we had a strong push here, and then we had a correction for a few months, and then we had push higher. So what we could see is here is just a correction, sell off for the next few weeks, months, maybe the end of the last quarter of this year, maybe even start of the next year. And then we could see a push higher if we get a tax reform. Like the Trump administration's talking. This will help big business, especially if we get the corporate tax reduced from 35% down to something around 20% or so. This would be huge. We have one of the highest corporate taxes in the world, so giving companies a lot more money to spend on expansion and hiring and innovation could continue to expand this economy. And a lot of this rally has been based on the hopes of that. So hopefully that doesn't deter it. But hopefully we're not in a bubble right now. But it kind of looks like we could be. And we'll just have to wait and see what this does here. But sorry for that little rant. I just wanted to give you guys a little insight into what this stock market could do. And a lot of people ask me why I'm watching the equity markets when I trade Forex. All the financial markets are in a big spider web. They're all totally intertwined. And a lot of the times when you see the yen tank or rally and you have no idea why because there's been zero news coming out of the Japanese economy or anything else, you could look to the equity markets and there's something going on, either a natural disaster in the world, risk of war, Kim Jong-un's rocket man's doing something crazy, Trump's crazy talking to another country, something. A number of things could be going on. But a lot of times the yen, the Swiss franc, the US dollar, you'll see these change with these times, as well as the Aussie, New Zealand, and CAD. They do the inverse relationship. But yeah, that's why I cover this stuff. So I'll go ahead and jump into last week's news and what happened last week and what the major events were. This was, as we covered last week, this was the main events of this week was going to be the NFP every first Friday of the month, the job reports out of the U.S., as well as the Canadian job reports. So starting with Sunday, all we really had, Theresa May spoke in a BBC interview on Brexit, nothing really important to us, so that was nothing we followed. The Japanese manufacturing index, we had mixed numbers here as, the non-manufacturing was missed, but the manufacturing beat, so not too much crazy there. That takes us into Monday. This is where we really saw the begin of the decline in the pound, as we see here overnight Monday, early morning. We had PMI manufacturing numbers missed. I cover what exactly this is. This is just a gauge of the manufacturing sector. Purchasing Managers Index is what PMI stands for. Basically a survey conducted of the top companies and their basically the management's outlook on employment and expansion and growth and all that stuff. So this missed expectations as the Brexit might be weighing a little bit more on the at least consensus for the economy than we anticipated or that we see. So this is really starting to impact the pound. U.S. dollar, one of the things that began the rally this week was the ISM manufacturing PMI. Again, this is the exact thing, but out of the U.S. economy, out of the manufacturing sector, we have the gauge of sentiment from the managers, a bunch of big companies, and you can see it's very, very high. If we look at this number as opposed to the last 6 months, you can see it's much higher. So there's a lot of optimism going on in the U.S. economy as this tax reform is around the corner. Well, this would benefit big companies, as we said, big time. So they're starting to feel that. Um, then we had the Australian dollars RBA rate statement that meets 8 times a year. We covered this last week, but we had a really uneventful meeting this week. As we anticipated, there was no rate hike. They kept rates unchanged for like a long time now. They also had really no change in rhetoric or any signs of future rate hikes or anything. There's no more hawkish tone than we had expected or anything like that. So this is what's kind of contributing to a little of the sell-off with the Aussie, as there's really no hawkish rhetoric at all coming out of them. People were kind of expecting them to start talking at least more about hiking rates as the rest of the world is, but we didn't really get that here. So not much happened there. And then Tuesday we had the PMI for the construction sector miss again out of the British pound, out of the UK for the British pound. So let's continue to see the sell-off. Then we had Wednesday, services sector beat, but didn't beat by much here. Pretty much on par almost, and that wasn't enough to lift and rally the pound as it still continued to fall. U.S. dollars non-manufacturing PMI was greatly higher than expected as well. Then we had Draghi and Yellen speaking. Draghi spoke. It was uneventful. There was no monetary policy mentioned. And then Yellen basically just had an opening speech. Also nothing worthy mentioned. Then we had Australian dollars. Retail sales missed. This is pretty big as it shows, the consumer spending and the retail sector's health. And it missed pretty big, so that was pretty bad there. Trade balance was better than expected, but still not enough to pull the Aussie up higher. Then we had Canadian dollars trade balance missed expectations. This is continuing to lead to the downfall of the Canadian dollar as they missed their export-imports balance sheet. Then the nothing really going on here affecting the dollar on Thursday other than that. Moving on, Friday was our big day of the week. Canadian dollar employment number missed expectations. Employment rate slightly got better though. We saw initial strength out of the CAD. But nothing too crazy as far as movement goes. It's a Friday, so there's usually a big push, and then it kind of dries up for the rest of the day. And then the U.S. dollar. This was a little bit deceitful of a report from the outside looking in, because you can see we were expecting 82,000 jobs created, and instead we lost 33,000 jobs. But this was due to 2 different hurricanes that hit our country. We had Irma and Harvey, both put so many people out of work and companies out of work that this number is skewed. It's not accurate. It's really the hurricane created this. But as you can see, this is the big number of the week. Average hourly earnings increased. We've been looking for this for a long time now, as we haven't seen hourly earnings increase. This has been a huge problem with the economy. As you can see, there's only been 3 other months in the past year or so where it has grown. So this was an upward surprise. And this should continue to fuel the fire of the Fed hiking rates in December and continuing to hike rates through 2018. So this is the number that all eyes were on. Unemployment rate as well dropped to 4.2%, which is unbelievably low. And so these 2 numbers really outweighed this hurricane number here. So this is why the dollar continues to be strong, and we'll continue to be looking for buying the dips in the dollar. Takes us into next week. Again, uneventful week, but it's another U.S. dollar-based week. We have inflation numbers coming out this week, which is the biggest thing on the Fed's radar next to the wage growth. So CPI and PPI comes out this week. U.S. dollar is going to be on our radar all week long as we see if we can continue to reverse this trend, maybe form another shoulder this week, and then push higher and continue to push into upward territory. Sunday, Monday, nothing going on. Tuesday, we have the pounds manufacturing production. Again, this is showing a gauge of the manufacturing sector month-to-month report. So this will be a big, big, big event to watch. I'm actually going to start waking up now at 4 a.m. to try to jump on some pound trades, because these have been really big market movers in the European Open. That's pretty much it for Tuesday. Not really much else going on. Takes us into Wednesday. The FOMC meeting minutes. This is 8 times a year, 3 weeks after the Fed's rate statement. So basically they have the rate statement, They met last month in September. 3 weeks later, just like with the Australian dollar, the Reserve Bank of Australia does this same thing with their meeting minutes. The Fed meets and has their meeting minutes 3 weeks after their initial rate statement. And this basically is just a more detailed record of their meeting. The meeting they had, the 2 day meeting prior to the rate statement, which is what comes up with this rate statement and the reasoning behind it. So this is going to be a detailed report of it. Not too crazy to watch, but there could be some more hawkish or dovish tone in there, some more insight into the generalized statement that we got. So this is something worth watching for the U.S. dollar and keeping an eye on. Takes us into Thursday. We have the first inflation numbers of the week with the PPI. This is the producer price index. This is going to be inflation gauge from the producer side of the economy, the companies that produce the goods that we buy and the costs that they're paying for them. This is a really big gauge for inflation in the U.S., and the Fed watches this very, very, very closely. Following that, we have Draghi speaking. He's speaking at a council on international economics in Washington, D.C. in the U.S., and they will be discussing monetary policy specifically. So this is a very big event to watch this week as well for the euro specifically. At 10:30 a.m. Eastern Time on Thursday, Draghi will be speaking, and it is in regards to monetary policy, which is what we watch here in in the forex markets, so this is big to watch. And then we have two FOMC members speaking. Nothing too crazy, but they are also talking monetary policy. So for the U.S. dollar, we could see some movement around this time as well. Then we have the weekly crude oil inventories numbers. And then this takes us to Friday. We have the second inflation numbers of the week out of the U.S., and that's going to be CPI. This is Consumer Price Index. This is going to be the goods and a basket of goods and services on the consumer level, so the prices that we pay at retail as consumers for these goods and services bundled up to gauge the inflation and the increase in prices. This is another thing we're watching, as one of the mandates that the central bank has on their plate is controlling price stability, and inflation is the gauge of this price. So this is going to be something big to watch, as well as retail sales out of the U.S. Again, this is a gauge of retail sector and consumer spending, which is one of the biggest sections of the economy, and it shows how relatively ready and how actively consumers are spending their money that they make in their jobs. So this is another very good gauge for the economy. The more consumers are spending, the more money they must have in their pockets, and the more optimistic they must be on the future. So this is a very big thing to watch, and something we'll be paying close attention to here, which is going to have a huge impact on the U.S. dollar. Now, that covers the news for the weeks, and as I said, there was not too much going on this week, so I'm going to dive a little more here into, I'll spend the last 5-10 minutes or so on technicals, as we have some very critical things going on in the markets right now. Started with the majors. The euro came up, as we called it, formed this head and shoulders triple top formation here, and then broke this trend line support, and we retested and rolled over. Still been rolling over. As you can see here, we struggled Friday to pass below this, as the U.S. dollar didn't really strengthen as much as it initially started to. But I'm expecting it to make another higher low, maybe pull back a little bit here to retest as S20 crosses the 50, and then push lower and continue this trend reversal. Pound dollar, we saw strong moves, as we pretty similar to the pounds futures index chart. But as we see here, we had this very, very strong move. Came up, made a high base, and then as the numbers out of the UK have been starting to reverse and show bad numbers, we see this broke the bottom of the support, broke this weekly support, broke both SMAs, and has now fallen all the way back down to this support and this strong weekly trend line we've got here. So, very parabolic move to the downside, and broke multiple levels, and now it's back on support and the trend line. Not too much going on in terms of looking for trades for this, unless maybe we get a nice rally, and then we have some weaker numbers, not going to get back into this possible downtrend. Taking us into the dollar CAD, as you guys saw here, we violated this strong level, and we anticipated at first a little bit of a rally and then continue lower. But again, with Canadian dollar, all these numbers have been missing, causing this strong leg higher here. We've just not even looked back. It's broken through 20 SMA, broken through 50 SMA, broken through this weekly support turn resistance, and have now traded above it. I like this chart on the 4-hour chart. I like this a lot because we broke to a new high and we pulled back right to this resistance here, now support. Maybe we'll have a daily wick come down and hit here, and then we can enter on a reversal to the higher. But all in all, CAD's got a nice strong uptrend now determined as we broke above the 20 and 50 SMA, and we're curling this 20 and 50 back up. New Zealand dollar, US dollar. I like this chart a lot now too. As you can see here, we've had a high hit here, and then price sold off on a bigger. There's smaller moves within this, but on a bigger scale, we set a lower low, came back up, set a lower high, and have now come down to set another lower low. I'm expecting price to possibly come back up, set a higher low, and then roll back over and see where we can go to the downside from there. But as you can see, I really like this price action. Broke this very strong support. Also the 200 SMA, 20 and 50 are now rolling over and pointing downward. So this is great looking for a downtrend. And I'll be looking to sell rallies and get into this downtrend as well here. Maybe on a retest to these levels, I'll enter short. Dollar yen. It's in a high base now under this resistance here that we've been watching. We have a downtrend line on the daily. Up here we have a higher one on the weekly. It's under this support resistance zone. You can see all these rejection wicks. So as soon as buyers try pushing higher, sellers are coming in and pushing it back down lower. We had this massive shooting star candle on Friday, which I do not like the looks of as far as bullish sentiment goes. But we'll see. The 20 SMA is shooting higher, broke to 50. Hitting the 200. We're trading above all three SMAs. So bullish overall, but this little candle pattern in here and things like that really have me hesitant to really do anything either way with this pair. Aussie dollar. You can see we were in a nice uptrend. Higher highs, higher lows, higher highs. Double top tier and broke the trend line, broke the 50 SMA, set a lower low, lower high. Now we set a new lower low this week, but we are hitting this strong weekly resistance turn support level here. Strong weekly support, so I'm expecting price to at least rally higher, could move sideways a little before breaking lower. Inflation's numbers this week will really be the determining factor for all these charts we're looking at here out of the dollar. And the Swiss franc, again, this is another chart that I love that I told you guys I've been waiting for something to happen, get out of this range, and we have it. If you look at this on the weekly chart, you can see this very nice weekly downtrend line was broken this past week. It had a spinning top form on it, but then this week we broke above it. We also have this strong weekly zone here, support turn resistance, that we have now broken closed above. Taking it to the daily, you can see this a little better. We came up and we've been setting a series of higher highs, higher lows here in this range and has broken above the range. Now we did have a shooting star candle here, tapped the 200 SMA and sold off at the end of the week last week. But I can anticipate this to move higher. 20 crossed above the 50. They're both sloping upwards now. We should get a little bit of a mean reversion, a little bit of a sell-off back to the averages before it pops up higher. But I am bullish overall with this here as well. A couple other pairs I wanted to show you guys real quick. The Swiss franc, Japanese yen. Again, from a weekly time point, you can see this strong weekly level here has now broken up and above. Going to the daily, you can see here it broke up above, come back now to retest here. We could expect this to push higher and set a new higher high and break out of this bullish high base we've got here. But we'll have to wait and see what goes on here. Also, another thing with the Swiss franc I'm watching now is the Aussie Swiss franc. As you can see, I really like this pair here. This daily uptrend was violated. We're still kind of range bound here, but broke and retested this trend. The 20 and 50 are starting to roll over here, and if we're able to break this really strong support here at like 76, in between 76 and 75.50, if we're able to break this really strong level here, I expect a retest and a rollover as the price action has started to show us some bearish signals. We'll have to wait and see with that as well. Also, another chart, Euro Aussie. Covered this before, but you can see this massive ascending triangle we've got formed here. We've got this resistance that's holding as a ceiling, and price has not been able to pass through. Every time it's tried, you can see the sellers came back, pushed it lower, but at the same time, we are having increased buying pressure as there's a set of higher lows being made, and price is squeezing into this range. Whenever price gets squeezed low like this, and there's low volatility, a big move happens. And I'm not saying it's definitely going to be the upside. It could be to the downside and roll over. But if you can see here, we've been testing this high very frequently now, and I think price could pop up higher and break out of this. And the last chart I wanted to go over here real quickly was the little more detail on the dollar chart. Um, as we showed here with this power reversal we've got going on, what could happen now here is if we get some mixed or slightly weaker numbers out of inflation, nothing too crazy. If it's some really strong misses, we could see this roll over and continue back to a downtrend. But if it's just mixed, or even sometimes there's bearish price action after a positive number, what we could see happen here would be a nice left shoulder, a nice head, and we could see a right shoulder form here. Right? This would be a nice head and shoulders pattern giving us a neckline right in line with this strong resistance, and then we could see a break higher as price could push up from there. But this is again just an idea of something that could happen, but I really like the looks of it, and it could materialize. And if it does, this could be another great trade opportunity. But if we get great PMI number, CPI and PPI numbers this week, we could just see price bust higher and take off without looking back. So we'll just have to wait and see what the data and price action show us. But that pretty much does it for this week, guys. Appreciate, again, you guys taking the time to do these. Shoot me a message with any feedback you have, because I'm trying to make these as good as I can for you guys. And I want them to let me know if you want them to be shorter. I know 30, 40 minutes is pretty long, but when it covers everything for the week ahead in one spot, it really does save a lot of time. And I spent hours setting these videos up, so it really does help you guys out a lot, I hope. But if you have any recommendations, I could do these shorter, I can do them longer. Let me know what you think. Shoot me some feedback. Follow me, like, subscribe. Check me out on Instagram, core.fx. CoreFXTrading.com is my website. Check it out. Thank you guys very much. I really do appreciate you taking the time to watch these. And good luck. I'll catch you next week.